Welcome back. You're watching us here on Halftime Report. The Nifty around that 17,050 mark, pretty much in the middle of today's trading range, has been rather volatile, so to say. But the good part is that it has been in that range. So let's talk about, things in the F&O space as they stand at midday. The Nifty has been in this range of 1786 on the way up today to 1716 on the way down. So just a 70-point range. Will be interesting to see where it goes from here, given the FII long positions at just around 8.5%. But what's also taking place is that today's range has given a range for the option writers to be active as well. The 17,000 put at the lower level is seeing a fair amount of writing for a premium of 80 odd rupees, telling you that 16,900 to 16,920 is the first leg of support that the street believes would be at the lower level. On the way up, however, resistance continues. So 17,100 call writers extremely active as well. Almost 33 lakh shares being added in open interest for a premium of 70 rupees, telling you levels upwards of 17,150 could face some resistance. But remember, during events, ahead of events, what's most lucrative to option writers is writing a straddle, which is both a call and a put together. So 17,050, where the market is right now, is where the most active strikes are too. So if you just take a look at the 17,050 put, 25 lakh shares added in open interest for a premium of 109 odd rupees, and take a look at the 17,050 call. That has an equal number of open interest added in shares with about 90 rupees in premium. So combined premium at the 17,050 strike is 200 rupees, telling you that levels upwards of 17,250 and around 16,850 is the broader range that everyone's looking at. 16,850 near-term support, whereas levels upwards of 17,150 going all the way up to 17,250 would face some sort of resistance.
Okay, so we'll watch out for those levels and also get in our technical expert, Sacchitanand Uttekar, who's the AVP Technical Equity at Tradebulls. Sacchitanand, it has been a volatile session, but at least we are stable at these levels. What are the charts suggesting, and what would your individual technical picks be?
Good afternoon, Sonal. Sonal, last Tuesday also we saw a similar kind of a setup wherein the Nifty was displaying a pullback. It was trending somewhere close to 17,200, and it was confidently trending below its 5-day exponential moving average. So even then we had the same strategy of selling these pullbacks, and I think that particular strategy still continues. If you look at the last 2 trading sessions, yes, we have seen a smart recovery on a daily basis consecutively, but Nifty has somehow not sustained above, or it has still not closed above its 5-day exponential moving average, which is placed somewhere close to 17,070. So as of now, if you look at the ADX, which is a directional momentum indicator, it is still placed in the negative zone when it comes to daily chart. And on the weekly, it has displayed a fresh breakout above that 25 mark. So we are expecting that the bottom should not be in place immediately. Probably it is too early to call it as a bottom, and we may see some more pressure getting built in. So the strategy still remains to be on the sell-on rise mode. Overall, until unless we don't see a sustained closing above this 17,240 mark, it is better to utilize all these pullbacks to create some fresh short positions. The level that we are tracking on the lower side now is resting somewhere close to 16,770, 750, which is the September series low. So as of now, I think it is good. It is a good idea to create some fresh shorts. The stop loss should be placed at 17,240 for our probable target somewhere close to 16,750.
And what would your individual technical bets be?
The pressure is evident in the metal pack now. Here we are looking at JSW Steel. It was maintaining itself well above that 680 mark. Now that particular support has also been breached. So we're expecting a further drag towards the 640, 650 kind of swing low. So fresh shorts are recommended here. The stop loss should be placed at around 672 from here on. The other pocket of weakness that has been identified is Voltas, where we have seen a fresh breakdown from a head and shoulder formation. If you look at the averages, they are displaying a negative crossover on the 5 and 20 exponential moving average. Plus, we have a strong Y addition indicating fresh short positions which are built in. So we are expecting this particular move to extend towards 820. Fresh short positions can be deployed in Voltas. The stop loss should be placed at around 858.
All right, Sachi, thank you so much for joining in and giving us your views on individual stocks and the index using these rallies, mild rallies, as opportunities.